I want to show you one of the best things that you can do to help yourself learn this strategy is to reverse engineer the things you see happen in the market. Here are two examples that just happened, one yesterday and the other just this morning during a news release, that I want to show you this example and how this can be so powerful at helping you to take current price action and read that to help you leap forward into the future to find high probability setups and to recognize areas that the market might return to. If we look right here on the Aussie dollar, this is my actual chart markups from today. And if we look at this area right here, for those in my course know that I'm marking manipulation right here. But when we look at this market spike where price came up to this 76.34 and then encountered enough orders that price was able to reverse back down to the downside. When we look at our zones and we look at our strategy, was there a way that we could have seen where the market would go, number one, or number two, is there evidence of why price went to that point? What could we have done to have had a zone there if we were sitting watching price action in that moment? Because as I've said many times before, I can start my morning off with chart markups. I can start my morning off even with one bias, but as you watch price action print, you might or might not change the zones, change even your bias. A lot can change on pairs that run 80 to 150 pips in a day. And so when we look at this chart right here and we look at why price stopped here, number one, or like I said, what could we have done to have an exact zone right there? Now, in my strategy, I did have a zone right below that, and this, as the ones that have taken my course know, this is my very favorite setup. But for this video, was there any indication of why price came right to that point? And what we're going to do is we're going to go to the left. Just going to come right over here. And let's zoom in. And so immediately we see that where price pulled back to a while ago is at a break of structure. We already know that that is one of the confluences that I have specific rules around that, how I use break of structure in multiple ways in my strategy, but in this particular use of break of structure, it is just showing that to the left there was a break of structure, so we're already looking there. Now the other thing is that we do see on a lower time frame, we can't see it here on the hourly, but on a lower time frame we see where this candle, let me just zoom in a little bit right here, where this candle closed, you did have a pullback before the next candle continued its bearish push. Let's go down in time frame and just look a little closer at what happened right here. Let's reverse engineer this just a little bit. If we go down, let's just even say to the 15 minute, zoom back in here. So now I'm on the 15 minute and we see number one, at this break of structure here, there was a pullback. So if we take and draw our zone right here, according to our rules, according to our strategy, we draw this out. I'm actually going to extend this all the way to the right so that it brings us to current price action. And then let's now reset the chart and come over here and look to where price spiked to yesterday. And this is what this strategy is about. It is based on zones. If you can nail drawing your zones, you have got this. You can trade this and be consistently profitable in the markets just with your zones and using multi-time frames. Right here, again, we see that this came exactly to a zone that had already previously been printed in the market. And that if we just look left, we can find evidence and look and see where these zones are. Those of you that have gone through the advanced course, you know that is one of the things of being able to see and look at these areas in the market, even on the time frame that you're on. If you're on the 1 hour, you should be able to see and to know where those pullbacks are existing, even when you're not always seeing them on the candles on your time frame, because sometimes it can really be powerful, especially when you combine them with some of my other confluences of really pinpointing these places in the market that price might have a reaction at. And according to our strategy, when price has these reactions at these places in the market, we drop down to a lower time frame, and then we look for our refined zones. We look for price to begin moving in our direction, if that's our bias, to look for taking a trade. But it is really, really fun and awesome to be able to watch price just moving. You don't ever know 100% where price is going or what price is doing, but we are just chart investigators, and we can look and find these zones all over the place. So let me show you another example. This one again was from yesterday. There was one that happened just this morning, and no, it wasn't on the Euro-Yen. It was on UJ. All right. So this happened this morning. We had a 8:30 news release this morning. I am on the 5-minute, and the unemployment was released this morning. And so John and I, our personal trading rule is we do not trade when there's news, when there are releases that we have seen that for our strategy affects our trading. We just tend to not be in trades during that time. And the unemployment, even though it's rated as a medium news release, a medium effect, we have in our rules and our strategy that is one of the news releases that we are cautious around. And you can see that at that 8:30 candle, right at that news release, we had a spike. And we say, okay, just a spike up from the news release. But again, we go, where did price go? And for our strategy, if you look to the left, what did we have? We have where price pushed to the downside, pulled back, pushed to the downside, pulled back. This was a previously established sell zone. And so if we just look at this and go at any time, we can look at where price returns to our zones and draw these perfectly with the rules that we have in place. And it gives you such power. You're never taken aback. You're able just to flow with the market. You can find your zones. You can then begin to draw your refined zones off of where price rejects, or off of where price spikes to, or off of where manipulation and liquidity engineering happens. And so these zones are so powerful. And again, anytime you're going through the markets and you see price stopping at a certain point, do yourself the biggest favor ever, and every day pick random places in the market and look back to the left and also in lower time frames to see if you can identify evidence that printed in the past of why price might have returned to that point. And of course, you're going to have times that you're not going to see that, or that you can't find evidence of that, but it adds so much to your experience and to your confidence as a trader to be able to recognize those zones as they're printing now for what's going to happen days or sometimes even weeks into the future, that you can start to really prioritize which zones might have the highest probability of reaction. So again, just two small examples from today and yesterday, just showing that the market returns and always leaves footsteps. We trade previously established retracement zones, and part of your job is to learn to recognize those zones and to master the art of drawing them. So don't sleep on the exercise of reverse engineering these peaks in the market. Go and find out why. Go and try to track down what could you have done to have had a zone drawn at that specific place and price point in the market.